Welcome to Darin Batchelder's Real Estate Investing Show. Each week, you will learn how to grow your wealth through real estate investing. Be introduced to the players that are getting it done and learn how you can get involved. And now, here's your host, Darin Batchelder.
Hello, everyone. Today we have a very special guest. We've got John McGaugh. John, appreciate you coming on the show.
Thank you, Darin. It's very exciting to be here. Thank you for having me on your show.
Absolutely. So just a little bit on how we know each other, and then we'll kind of get into it. So John and I are both part of the Sumrock Group. He's a member in a number of different groups that are focused on both commercial, multifamily, and RV park investing. And I'm very interested to have John on today because he's the first person I've had on the show that's going to be talking about RV parks. And I purchased an RV back in April of last year, so I'm interested to learn more about it. So with that, before we get into the Q&A, can you share with the listeners your background and what you've gotten into in terms of both multifamily and RV parks?
Sure. Well, I've done a little more than just multifamily and RV parks. So I started with Lifestyles Unlimited. Well, I started before that with by myself. I was working an IT job and get off work, and I would go remodel homes and then put them up for rent, and that was really tiring me out. So I went
When was that?
Gosh, that was, 2001.
2001. So you've been doing the real estate thing for over 20 years.
Oh, yeah. Yeah. My first wife was a real estate agent, and she had a full-time job. And my brother-in-law, Gavin, was a broker in Arlington. And he would take me around in 1995 and he'd show me bricks. He'd say, okay, look at the line here. This will show you how to do foundation, if it has foundation problems. And we got a divorce. Well, we started building houses in Euless and Grapevine. And from scratch, we buy the land and built the house. And then we got a divorce. And I decided I would do rentals, right? So I buy homes and do rentals. And like I said, I get off work and I would go rehab it and do all the work myself, just small stuff. And then I'd hire some if I need an electrician or whatever. But it was so tiring. And then, I heard Del Walmsley on the radio talking about, here's, come in here and learn how to do this. And of course, I went into Del Walmsley's Lifestyles Unlimited, and Brad Sumrock was my first mentor, right?
Oh, nice.
So I went to the class a few times and thought, oh my gosh, I can't believe I'm doing this wrong. So anyway, I started investing again. Actually, I sold all my properties, and then I went and started doing it again with them. And oh my gosh, it was so easy. And when I started doing it again was 2009. Around there, 2008, and it seemed like every house I bought started making money when I rented it. So I did that up until 17, but I liked the commercial, had a lot of people doing commercial and multifamily. So, I taught real good friends with my CPA, and she had a few syndications, and I was learning how to do that. So I did some syndications with senior living, and then did some with multifamily, and left Lifestyles and joined Brad's group and learned how to do it there. Brad's a great speaker and a great teacher. And so I did that for a while, and my mom, here's a good story. So
yeah,
my mom calls all our siblings up to Oklahoma. She says, I got to talk to you kids. And so we're like, okay, what's going on?
Right.
So we go up there, and she hands me this box. And I looked in the box. I go, Mom, these are my baby pictures, my growing up pictures. She goes, yeah, they're yours. You see that big fifth wheel out there? We're selling everything and hitting the road.
Oh, wow.
So that was 13 something years ago. And, me and my son would, on a long weekend, we would catch a plane and fly to wherever she was in the nation. We went to the Smithsonian. We went to Oregon, Washington State, and Florida. We flew all over when we had time and met her while she was traveling. And I got to see, how exciting it can be and how relaxing and you get to see, it's not the world, but you get to see the U.S.
Yeah, I mean, that's fantastic because I didn't, before you sharing that story, I didn't know that you had a history of actually doing it. I thought that you made the transition from multifamily over into RV park investing, and I was interested in that. But I think it brings a different dynamic if you've actually done it, And so your mom, sold everything and started traveling the country, and then you and your son started to visit her, and you saw, some of the lifestyle changes, and some. Look, there's pros and cons to everything, right? But you get to see the country instead of living in one place.
Yeah, and of course she did this so long ago. It was, and they also did work camping, right? So they would, be host at parks, and so they could go anywhere, and it wouldn't cost them to stay a month, or they actually got a little bit of pay, and then they got to stay for free, all across the country. They just did Yellowstone. When did that flood happen? Last year?
It was, I think, during the summer of 2022.
Yeah.
Yeah.
So they were camp hosts out there in Yellowstone.
Oh, wow.
Yeah. It's pretty awesome. And then I partnered with another partner. He said, he calls me up one day. He says, "Hey, John, I'm building this park. I'm thinking about doing this. What do you think about it? What do you think about RV parks?" I said, "Well, I like them." And I told him the story, and that's how I got started.
So you had the experience on the residential side, you had rental homes, you had multifamily, you had assisted living, and then you get a call from a guy, a buddy, that says, "Hey, what do you think about RV parks?" And you decide to partner with him on your first park. Is that the park that was being built in Euless or
in Ennis?
In Ennis,
yeah, Ennis, Texas.
So share a little bit about that project. And why did you like moving into the it's one thing to travel in an RV. It's another thing to actually invest in an RV park.
Well, it was partly because, the enjoyment I see with the kids and the families doing this and the freedom of it. It's just a great lifestyle. It's, some of them do it full time, and then, there's people that just do it for vacation. And it just struck me as something that I wanted to be a part of.
Sure. So the development in Ennis that's an hour south of Dallas?
Yeah, it's an hour south of Dallas on I-45 between the two largest cities, Houston and Dallas. And I'm divulging a little bit more information. So we expected, around $26 million value. Well, that value has jumped up because of our dynamic pricing for these parks. And that's sort of why we are looking at mom and pop parks that just take phone calls,
right,
and credit cards over the phone. Nowadays, software is so advanced that you can book online, you can deliver wood, you can pay for everything right there with your credit card. You can just click and say, I want this, I want a golf cart, I want whatever, and you can just pay for it with your site number and your credit card.
Yeah, I mean, there's a lot of things about the RV park that I like compared to multifamily. You said dynamic pricing, this year I think interest rates is the big discussion, but last year was really, inflation, and inflation is causing, the Fed to raise interest rates. But when I think of multifamily, I think of, first of all, you build an apartment complex in it, or you buy an existing one, and the mix is already there. It's 1 bedroom, 2 bedroom, 3 bedroom, and you have a certain percentage of each. And sometimes the flow changes and the demand changes, and you might be full on your 1 bedrooms, but that's where the demand is. And, 3 bedrooms, nobody wants one right now. Well, with RV parks, it really is daily, weekly, and monthly.
That's right.
And so you can change that mix on the fly.
Right.
So is that what you meant by dynamic pricing?
Well, no.
Okay, so explain.
So, and to your point about that mix, you're absolutely right. If there's a recession, or people slow down on RV park transient people, you can change that mix to monthly or weekly, which is great. You can just change it however you want. And then let's say you have a big event coming, you can, change that to daily. You have to schedule it, of course, and you can also put in time limits that people can be there. And I'll give you a good example of dynamic pricing. So for Ennis, we're doing one, Ennis is finishing up, and we've started one in Lake Fork. But with there's 30 events in Ennis a year. There's the Bluebonnet Festivals, there's the AAA drag racing, and with those events, it goes like this. So your first 10% rented, it goes up $2 per site. And then another 10% rented, it goes up another $2. Or you can do it linear, or you can do it kind of like a bell curve, or just a set dollar amount. And through our research, we did a couple of companies that come out there, example for the races, the drag races. We did Napa Auto Parts. They're a $19 billion company a year. And they're just the shell of the race car is $500,000. And then it's $1 million for the team, and you get the picture. It's very expensive.
It's expensive to have a race car team.
Somebody told me, you want to make $1 million in racing? Start with 2.
Right.
So,
right.
Anyway, so we look at it and we say, okay, if they were going to rent from us, and our average rate is $80 a night or $87, and they come in and our dynamic pricing has already gone up to under $200, they're going to say, well, how much is it? Is it, it's $200 or $150. That's crazy for us. That's a lot of money for one spot. They're going to go, oh, get it, right? Get it. We're spending, millions of dollars for this one race. What's $200?
Right.
So that's how dynamic pricing works. And like when you fly on the airlines during Christmas or Thanksgiving, you're not going to pay the same price as when you fly in January or February, right? You're going to pay a premium to get to your family. So that's dynamic pricing. And then on the other...
Right. I love that you tie it to events, in the area, because that's, it kind of mimics, well, it's not the same, but it has a lot of the characteristics of a hotel, because you have hospitality, you have online booking, you can book it right online. You pay, with RV parks, you typically pay before you go, right? So you don't have the delinquency that you have and the late pays that you have in multifamily. And then you have the ability to change the price. One of the things that's attractive for multifamily versus, say, industrial, you lock in prices for 5 years, maybe 2 or 3% rent bumps, and with multifamily, you can change the pricing annually. But with RV parks, you can change the pricing today.
Yeah. Yeah. By the minute. Yeah. Yeah. There was something else. about that pricing. Oh, yield management. On the other side of that too is yield management. Let's say it's a down month or a down season. Maybe it's wintertime. Now, Texas is a little different from other RV parks because Texas is we have a very mild winter, right? But let's say we have January. I think that's the lowest month for travel. But the software can automatically lower that to get people in.
That's great. That's great. The other thing is that when I think of comparing multifamily to RV parks, there's very little maintenance on the turn. Like when somebody leaves an RV space, you don't have to go in and repaint it and put in new flooring and, resurface the countertops like you do in multifamily. So talk about that a little bit.
Yeah, so the only problems that we have is if somebody runs over some of the electrical, and that can be fixed in a few hours a day at the minimum, right? Stand it back up, have an electrician reconnect it, and they got to run over it pretty bad to damage it, right?
Is that running over the actual pedestal that has really?
Yeah.
They
People back into them.
Okay.
But not often, not very often. And Darin, I've had apartments. Well, I've had two apartments that caught fire that I was passively involved in, and that affected, the returns for a while.
Right.
And, it's a little bit hard to burn a pad, right? So, that's a nice thing. And then when it comes to also, I've had an apartment that had some problems with evictions, right? We couldn't get the people out because the judge was favorable to people not paying rent because the pandemic and everything. Of course, now it's starting to change and starting to get them out. But when it comes to RV places, they don't live there, right? There's no mailboxes. This is not an eviction. This is trespassing.
Yeah, that's a big distinction between multifamily and RV parks. Now, I did see out west there's some proposed law. I don't know if you saw it. It just came out like in the last couple of weeks. I think Oregon. If you stay over a month, they're talking about changing it to be, more tenant laws. Yeah. But that's got to be something to watch. But I don't, across the country, I don't think that is out there yet. And
now, yeah, and I did see something about that. And we invest in the states that are more landlord friendly, like sort of some of the people in multifamily. I know they do that too, which is.
So what states do you like?
I like Texas, Florida, Louisiana, Arkansas is great. And, it depends, of course, the amenities and the draw, right? You can have something in one state that has a huge draw. I like West Virginia. We're looking at a deal right now in West Virginia. We're going up there to meet the governor and the mayor of Charleston for a project up there. And cool. They just came out with the brand new national park, the newest national park.
So your park is going to be near that national park? Uh-huh. So what kind of software do you use, and how is property management different in RV parks versus multifamily? Because my understanding is you don't have the choices on the property management side that you have on multifamily, where you can have third-party property management. So, one, what type of software do you use for all this online billing? And then two, do you self-manage or do you have a third-party property manager?
We have Buzzworthy Property Management, and there's many different, I mean, it's really come a long ways from the old days, from managing. There's CampSpot, New Book, RMS, and our software, or our property management people run RMS. And there's plenty of RV park management companies now.
There are, okay.
Yeah.
I wasn't aware of that.
Yep.
So who is the target? One of the things I heard about RV parks is that from an investment standpoint, one of the attractive parts is that, multifamily, there's some deals that I've seen that have traded, 3 and 4 times, different buying groups, and they bring new capital and they, improve the property that much more, and they're able to raise the rents. And, but one of the things that I've heard about in the RV park world is that there's a lot of mom and pops, that have, purchased one RV park, or 2 RV parks, and they're self-managing, and they're, they kind of want to retire and get out, and they're not as sophisticated and don't have all the software applications and the know-how to take it to the next level. Do you see that?
Oh yeah, it's 70%. 70% are mom and pop. The other 30% are like KOAs, Jellystone, Margaritaville. Now Jimmy Buffett's company is getting big into it. So those are the parks we like. There's the very low end RV parks like trailer parks, and then there's the mom and pops that we like to buy and bring in the software. And the software now in the management companies, they do a great job of managing these, and we can continue to buy, parks. It's like when I was at Lifestyles Unlimited and they told me how to do it right. Now we just hire the people who already do it right, and we can continue to go buy. Like, I can continue to go buy single family homes and go, oh, wow, that works.
Right.
Right. And with these management companies that know how to do it, and raise the rents, or, do that not dynamic pricing, it's great. We're looking at one, actually we're about to buy it in Louisiana, and it's a mom and pop. It's a guy who had a bunch of land out there, and he built an RV park because he wanted to. And the same thing, he's about 70 something years old, and he's just tired of running it. And here's how he did it. He had the people that lived there, the full timers, cut the grass, check the mail, take the payments. And so we're, and it's full. They have a little bit, they have a little bit for transient and weekly and nightly, but they could do better, right? And we'll do better on it.
Yeah, that's huge. Some people I've heard have kind of compared it to self-storage maybe, 10, 20 years ago when, nobody was really in self-storage in a big way, and it was a lot of mom and pop self-storage facilities, and then, people have gone in there, and now there's a lot of supply. There's a lot of self-storage facilities around. So what I've learned in my travels is that there's kind of, and you correct me if I'm wrong, but I kind of break it down into like 3 different types of parks. A destination park, you go in someplace because either the park is fantastic and has a ton of amenities, or it's close by to something that you want to go to. A transient park, like, hey, I'm going to Colorado and I can't get all the way there in one drive, so I'm going to stop in Amarillo and stop overnight, and so I'm just going to be there for a night. And then you've got more monthly, and the monthly, I like, when I first got involved, I'm looking at that. I'm like, who are those? Who are the people that are in those parks? And there's people that don't want to sign an annual lease. People that are say traveling nurses, people that are on construction jobs that, might be there for 6 months or 9 months. And they, out west in West Texas, there's a ton of them because they don't know how long they're going to be on those projects.
Right.
And so do you find the same thing, that there's these three different types of parks, and which ones do you like?
Well,
focus on?
I've got a funny story. So we're starting Ennis, right? And we had an investor meetup on site at the property. And so me and my partner are standing there, and this Dodge Dually 4-door pulls up, brand new. I mean, it's expensive. 90,000 maybe? What do you think? Something like that. So we're waiting on, it's getting to the end of the day, and we've had our investors come and go, and had a barbecue lunch, and we're kind of wrapping it up. And I look and I asked my partner, I said, "Are these your investors?" He goes, "I don't think so." It was a husband and wife in sweats and Crocs, right? And, some flannel shirts. And I go, "Well, I don't think they're mine. They just don't kind of fit our typical investor, right?" And so they walk up and they said, "Hey, do you know when your park's going to be open?" And we told them, and I said, "What are you looking for?" He goes, "Well, we got 20 workers for BP that are putting in solar farms around our oil leases."
Wow.
And so we had 97 spots. We said, "You want 20 spots?" "Yeah, we only need it for about 6 months. We need 20 spots." And then we're like,
20, that's 20% right there. Boom. Leased up.
Yeah.
Right.
So, yeah, we were floored. And we see that. Those are the monthly, right? They're like, we're coming in. We were looking at a deal in Pecos, Texas, like you just mentioned. And the same thing, those guys go out there and right, how long are we going to work, right? We're going to get all the money we can. I used to have a friend that even worked out in Pecos, and, I tell this story. One year he worked for a little bit, and, he still had his old car, and then he went out for 6 months. He came back in a brand new 4-door, F-250 Ford. I'm like, "What happened?" He said, "Oh yeah, we're making real money, making good money."
Right.
These transient, people, in the hospital, nurses, they can make, real good money, and they don't have to stay in one spot. If you do a transient, the nurses get paid more, and these guys doing, remote work or far from home get paid more.
And, the RV parks on a monthly basis are pretty darn affordable from what I've seen. So, can you share what's the typical monthly rate for an RV park? And, we'll compare that to, say, multifamily. And I think
we see like $550 up to $1,500 depending on the location, right? And the need.
I mean, $550, that's, you can't get a 2-bedroom place for $550 in a multifamily. You're talking, $1,000, $1,200, $1,500, depending on where you're at. So I think that there's, and this is just my thought, is with housing prices going crazy, with multifamily, per unit prices, going up dramatically, that, where do people live? Yes, you have to purchase an RV, so you have to make the investment, but people that are, choosing to have that travel lifestyle can really pick an affordable place, to live and get full utilities and then not be tied down, to a long-term lease. Sure.
And we see, some of that happening too. Houses, especially in the DFW area, I don't know if you can find one under 200 that's livable, right? And that's why I got out of it, because the prices were so high. It was hard to buy it and rehab it and rent it. And we see a lot of people in articles about people just selling, like my mom, selling their house or not buying and getting an RV and then living anywhere there's internet, right? And working from their RV. The biggest growing group of RVers are millennials and Gen Z's making over $100,000.
Holy cow, really?
Yes.
I didn't realize that. So talk about some of the stats. I know that you've got a lot of stats. Talk about some of the stats with, RVs. I mean, obviously with the pandemic, everybody wanted to get out of their house and go do stuff. So that was a big run up in RVs. And, some people are saying that there's going to be a glut in RVs that are going to come back onto the market. How does that, just talk about some of the stats and where you think things are going.
Well, another article from CampSpot. Now, CampSpot is one of the softwares that does the management for RVs. They, of course, the reason dynamic pricing works is because it projects, right? It projects out to see what's happening and who's starting to book. And now some of the people that are with it and know that campgrounds and camp spots are busy, and they were really booked last year, and it was hard for some people to find it. So they're starting to book early. Well, CampSpot sees that 2023 is going to be another record year. And I was out in Arvik, which is the outdoor industry conference in Orlando.
Yep.
They said in the next 5 years that there's going to be 9 million more RVers in the next 5 years. So there's just not enough competition out there for people building parks, the ones that are already built. Also, the problem with the mom and pops, they're not too good at technology. Some of the other older people, right. They just don't know what Google Analytics are, or how to market. So their parks just aren't run very well, right? And they don't know what SEO is and how to get it out there.
Yeah, it's different than, if you look at multifamily, I think about, it doesn't always happen this way, but people, they have a job and they drive around 10, 15 minutes in their area, where do I want to live? And they do, drive-bys, or they look on apartments.com and look for apartments in their area. But with RVing, you really have to have an online presence in order to be found, or there's a bunch of RV apps that you can look up based on location or wherever. And if you're not on those apps, then you're not getting the visibility that you should be. So if somebody comes in and buys that park and then increases that visibility, increases that marketing brand presence, that is a value add.
Yes. Yeah, that's what we find are Facebook's easy, right? It's easy to use. And so sometimes I'll just put it on Facebook and put a number on it, a phone number, and hope somebody sees that Facebook page and then calls them. Actually, we saw a 118 unit park with a man camp in Pecos, Texas. They had 6 pictures and a Facebook page, no website, nothing else. And I'll tell you another story. So we went out there to stay, and we're looking at buying it, right? And so I call and say, hey, I'd like to book a place. And she goes, oh, okay. And I knew this at the beginning, that they were only 40% full, right? And we're planning on, coming in and doing some advertising.
Sure.
So we call and say, I want to book a place. And she goes, well, I want 2 nights. And she says, well, I don't have anything. I go,
I don't have anything. You're 40% occupied.
40. And she goes, well, I don't have any nightlies. I have monthly and weeklies.
So just change the freaking mix.
Exactly. Just change it. So anyway, I said, I'll take a weekly. How much is that? She says, $200. I said, fine. I'll take that. So we come, we look at the place, we meet with the agent, and the next morning I go try to pay, and nobody's in the office. So, the next day I try to pay. Nobody's in the office. I said, no wonder you want to sell. You're not taking money.
Yeah. So that's a good person to buy. Did you buy that deal?
Well, we're still trying. Yeah.
Oh, well, that sounds like the type of person you want to buy from. So I've had the same experience where I'm driving and I'm like to my wife, hey, we probably have another hour or two driving, here's the next major city we're going to run into, take a look for some RV parks in that area. And, we had this situation maybe 2-3 weeks ago. And so she calls and it's like 4:45 and, it just goes to voicemail. And we know we're like, if you get them after 5, then you may not get in. Yeah. Right. So happened to be I was really surprised because it was a big national chain of RV parks.
Wow.
And so I'm like, call the one in Arizona, they're still, open, and see if you can so call there. She got somebody, but they were like, I can't do anything for you. All I can do is see my system, and I can't get, and we're like, look, so you're telling us, well, my wife is more polite than I am, I guess. So I'm saying to myself, so they're basically saying we don't want your business for the next couple nights.
Right.
And so we went and stayed at a different park because you could not do online booking for the same night. And that to me is a lost opportunity. And, maybe I'm only staying there for 1 or 2 nights, but I will never tell anybody about going to that park. Where had I stayed there for 1 or 2 nights, I may have told other RVers like, hey, if you're traveling through here, you should check this park out. And they lost that opportunity completely.
Right. And what we see too is, with all the social media and Facebook and Instagram and TikTok, one video at that park or a check-in means maybe 10 or 15, who knows if this is an influencer or not, influencer says, oh yeah, or somebody who just connects with other RV, right. They go, oh, okay, well, there's a park. You're right. I mean, all that is organic advertising.
It really has. Now, you do have in the multifamily world, you have people that like where they live, and so then they tell friends and family, and then they build a community, and those people will stay year after year after year, which is fantastic. I think of the RV space, more like, I don't know if it's a good analogy, but like restaurants, like you're looking for reviews from other people. You're looking for to try to get as much information as you can about that location before you're going to invest. It's not just the money that you're spending, but it's also your time, right. That you have a choice on where you're going to stay. And so you want to hear from other people that it was, a good quality place. And, that can go a long way. And people talk, man. I take my dog to the dog park, and and my wife will call me like 20 minutes later, like, where are you? I'm like, I just met this couple, they've got a nice dog, and we're talking, and we're swapping stories about where to go.
Yeah.
And so, hey, talk about buying existing parks versus developing.
Okay. Developing, it depends on where it is, right? I've had a few, like Ennis, the city was, with us, and they liked it. We had to convince them, of course, at the beginning, because they're looking at it like a trailer park. And they do have another park that's 20 units out there. And, it's grass and gravel, and it's full-time people. And, they don't like some of the residents there. So we had to convince them that, like I told you before this started, there's a new RV out there that's $7.7 million with an optional Bugatti in it, right?
$7.7 million?
Yeah.
That's crazy.
Right? And it's optional Bugatti. That didn't come with.
But what are the low end? So there's a huge range in RVs, because you can get in with just trailering your, getting a trailer too, or pulling a fifth wheel, or getting into the A class. So what's kind of the entry level?
Well, I think maybe a 23-foot or even the vans. Well, the entry level vans, right? Those are small.
Those can
But
be expensive when you
oh yeah, they're
cut.
120,000, I
Yeah,
think. The
when you
Sprinter.
make them custom but the trailers you can get in for what 20, 30, 40 grand.
Oh yeah, yeah, 30 grand, sure.
And so you've got a huge, variation between to fit any budget from 30,000 all the way to 7.7 million.
Yeah.
And those people are probably staying in a little bit different place, than
But when
what we're talking about.
the difference between existing and construction, right?
Yeah, right.
So it depends on where it is, and if you can convince the city, hey, this is not a trailer park, right? And with Ennis, we've said 90-day stay. That's it, because they don't want pink flamingos and decks built right in the front yard or beside their trailer. They want to pick up and move on, so you don't have those people that are just staying, right?
So is that part of the 90-day max? Is that just your policy, or is that something that was part of the approval for getting the park approved with the city?
Yeah, that was with the city.
Okay.
Because they didn't want another trailer park. I know a lot of cities aren't fond of trailer.
Yeah, I mean the RV park. I understand having to educate the city on that. Where my mind is wondering is like, I've had other people talk about. They would use the term winter Texans. People that were up in the Midwest and they want to get out of the winter, and maybe they're in Minnesota or Wisconsin or wherever, and they're looking to come. They don't want to go all the way to Florida,
No.
And Texas is a shorter drive, and they like the community, and it's a milder winter, but they want to come from maybe October to April,
Yeah.
and so that's over that 90-day limit, so you kind of miss those people.
Well, we'll have to have them leave for a day and then come back, just so we meet that criteria. Is 90 days in this spot, and they can go, they can boondock or go. Walmart used to let you sit in the parking lot or stay in the parking lot overnight. So something like that. The city really doesn't want them
Camping out, right?
Yeah, camping out, right.
Making it their permanent residence. Yeah. Hey, talk about financing for RV parks, because a couple interesting things there. One is, on the multifamily side, it's kind of upside down, right?
Yeah.
Like cap rates are lower than the interest rates that you're getting on the loan. So you actually have to implement some of the value add just to break even.
Yeah.
Where on the RV park side, there's still a positive spread, I believe. You correct me if I'm wrong, between the cap rate and the financing you can get on it.
Yeah, we're seeing a lot of the mom and pops around the 10 cap, and they still have a value add, right? So if you're buying a park that doesn't advertise much, doesn't have a website, doesn't have professional management, and you can buy it at a 10 cap and come in and implement the dynamic pricing, it does very well. And then on the...
What kind of financing are you getting on something like that, both LTV and rate-wise?
Well, we just got a term letter 2 weeks ago from a bank with 75% LTV. And we talked about this a little bit before, is that we thought we were going to have to bring in half equity and half debt. And the bank said, and of course the bank president was an RVer, and he says, listen, I get it. You guys can stop raising money if you want, because we'll bring in 75%, we'll do a 75% LTV loan. And
that's
it
huge.
was a pretty good interest rate too.
What was the interest rate?
It was 1 over prime.
1 over prime. What's prime now?
Yeah, well, Well, it changes, but 7.75.
Is it 7.5? So
Yeah.
8.5% rate.
Yeah.
And so
And
you've got 150 basis points positive spread on 75%
yeah.
of the purchase price.
And we already did our underwriting at 8%.
At 8%. So, right. That's fantastic. Now, what's the remaining of the terms on that? Is it a 30-year amortization, 25-year amortization, 20-year? Is there any interest only?
It's an interest only.
For how many years?
2 years.
Okay.
And then a 20-year AM.
20-year AM. Okay, so that's a little bit of the difference, for and that's bank financing versus agency financing on the multifamily. Bank financing typically wants either a 20 or 25-year AM versus a 30-year, and so they're getting paid back, principal, at a quicker clip than the agencies. So what are the investor forecasted returns on these RV deals?
Well,
Is it comparable? Is it better? Is it
multifamily?
multifamily?
For one of them, we're doing is a 3-year guarantee during construction, 8% pref, but we're pretty sure we're going to beat that. We're looking at with 100,000 down, return of 370,000. Wait, 307,000 on your 100. So you get your 100 back plus 207,000.
So it's more than 8% pref. So you've got the 8% pref, but then you're also having your pro forma that you're going to sell it at a. Do you sell these or do you keep them, or what's the exit strategy?
Well, we like the 5-year exit strategy. Unless we refinance and then we make the decision to keep it. If we get enough of the financing back, we raise the value enough to refinance and get a lot of the investor money back, then we just keep it. And what we like to do is kind of toss it out there and say, if there's a offer for it, before we refinance, say, okay, here's what we're going to make. Do you guys want to sell? Now, our project at Lake Fork, we know that these guys make offers out there quite often to the owners because we've talked to them, and they won't sell because, they're making money and they don't want to sell. What else? One guy said, what else am I going to do? If I sell, I may have money, but I like it here. So
right.
Why sell?
Yeah, it's not his time yet. It's not his time. So, but so it's similar to multifamily where you have two exit strategies, either a cash out refinance or a sale, and It's a 5-year business plan as well.
Yeah.
But that's a pretty amazing, pro forma return. I mean, typical multifamily pro forma return I see is double your money in 5 years. So you put in $100K, you get your $100K plus another 100, and this deal that you're talking about was $100K projected to turn into $307K over 5 years. So that's the power of getting into a market that is, it's less efficient. Mm-hmm. There's less competition. People don't understand it as much. But I think people are going to start to open their eyes because you have more and more people that have bought RVs that are traveling. I did not grow up in a family of RVers, but I wanted to see the country and I wanted to get access to different areas. And I'm one person, and then I tell other people, and I can't tell you how many people ask me questions about it and are curious, and they want to try it. And now there's platforms where you can rent before, like what was the is it RV Share?
RV Share and RV Easy.
Yeah. So I rented 3 or 4 times before I purchased.
Yes, so did I.
And so that's a great way to see if you're going to actually enjoy it. And
what did you rent?
I rented an Airstream 3 times.
Wow.
And then the third time, I parked right next to a guy in a big A-class bus, and he was helping me, set it up and stuff. And he could tell I was a novice. And he's like, "Hey, if you want a tour of mine, I'd be happy to show it to you." I'm like, "Great. Once my wife goes in there, I'm done."
Yeah.
And that's exactly what happened. We went into, it was a big old Integra. And we walked through that. And my wife was like, "Dishwasher, washer, dryer."
Yeah.
And so I did not have a truck. So when I started looking at the cost of buying a truck and the trailer, it started to make sense to look at getting an A-class. Look, it's like anything. You always spend more money than you think you're going to, and so I did. But we enjoy it. We enjoy lifestyle, and I think there's a lot of opportunity on the RV park investing side as well. Just even, do you guys do storage too?
Well,
RV storage.
We do storage. So Ennis, we were going to do storage with Ennis, and we started looking at the numbers. We started doing the dynamic pricing, of course. And we said, okay, we can get this many more spots out there, and let's look at the numbers. If this pricing works, then it's going to beat storage by miles, right? So we looked at it and said, oh man, Ennis is the location is right on the service road, near the Buc-ee's there.
There's a massive Buc-ee's, and you're right behind it or right next to it?
Yeah, it's 1,250 feet up the road from us.
Yeah, I mean, that Buc-ee's, every time I drive by it, is just packed.
Crazy. Man, they know market. I mean, they know locations, right?
Right.
And they also, that's an opportunity zone that they put that in.
Oh, is it really? So is your park in an opportunity zone?
No. There's a cutout like that big. Like
Oh.
just a little bit, and our park's right in the middle.
That would have been nice.
It would have been nice, yeah. So Buc-ee's has 55 to 60,000 vehicles a week.
Jeez.
That one in Ennis.
Wow.
And so, we've watched it. 1% are RVs. We estimate, let's say the minimum or 1% are RVs. So we have 97 spots. And what's 1% of 55,000? That's a lot, right?
That's a lot. So what was I love that you did that comparison of, okay, storage versus adding more spots. You said it wasn't even close. Like, what was it? 2 times, 5 times, 10 times? What was the differential in terms of opportunity?
Well, we don't know exactly yet, but at least 5 times more.
Wow. And I gotta imagine that the construction cost per unit is less than building the storage as well. So it's correct. It's less CapEx, and you're getting a better return. That's right. And you were already building whatever you have for amenities, the office, and I don't know. Do you have a pool or anything like that?
Yeah, office, pool,
showers,
clubhouse.
all that. All of that was already being distributed. You're already building that, and so you're just adding new spaces. That's huge. Another thing I learned by looking at RV parks is city sewer and water. Do your parks have that, and do you see that as an advantage?
Absolutely. That's a huge advantage. Of course, that's where you get into talking to the city, more cost. Ennis has city water, city sewer. The West Virginia one will have city sewer, city water, electric. gas on site. The one at Lake Fork, that's going to be septic. We may have city water. Right now it's on well, and then septic. And so you missed one other, utility.
Electric.
Internet.
Oh, internet. Internet's huge. That's the biggest complaint on, different RV parks is internet.
Yeah.
So what do you guys do for internet?
So we'll do Starlink, Elon Musk Starlink, for remote locations like that. But we got fiber in Ennis. I did some research. I paid for a survey, sent it out to thousands of RVers, and said, what's your number one ask? What's the number one thing that you want in an RV park? So 1 and 2 were shade and internet. Right. And it was so close that, I think internet actually beat it, but, and that goes hand in hand with the people working remotely. Right. So
that's huge. I mean, that's one of the biggest complaints I see on RV park, apps is nice park, but the internet was terrible, Yep. And so how do you work the Starlink for an entire park?
Okay, so, well, you remember I'm a network guy. My old job as a network guy.
Okay.
So Starlink can do, we've seen it do 70 down. So we'll bundle 2 into what they call a router that aggregates these together. So you'll have, that much bandwidth going over 2 or 3 Starlinks if you're in remote. And then for things that are in the city, also you can bring in multiple pipes. You can order 3 different services, or you can order the same service but 3 different connections and also bundle them.
Yeah.
So our point is, we want the fastest internet of any park around us or wherever we're at.
Which is definitely huge for anybody that has been traveling in an RV. It's very frustrating being someplace, and for me, I had pretty good internet in most of the locations I went to, but I was in Florida just in January, and it was extremely frustrating. I was in a high-end RV park, and the internet was terrible, and I was on Zoom calls, and I was getting bumped off. So I had to go out and buy Starlink.
Oh, did you?
Yeah.
How is it?
I went. Oh, it was great. It was great. Once I got Starlink, it was fantastic. But that's why I was wondering how you leverage that across, multiple spaces, because I had a Starlink for my RV. It's located outside, and you run a wire into the RV, but.
Well, and here's another thing. We use 3 solutions, and they bring in Ubiquity wireless, and then we take those 3 Starlinks or whatever, put it in that router, and that router goes out to this Ubiquity wireless, and that covers the whole park. That's how we do it.
So you hook the Starlink, and you have multiple Starlinks.
Yeah.
Multiple Starlinks into a router, and then the router goes out to where all of the spaces can access it.
Right. It goes out to wireless devices throughout the park, and those RVs can connect to any one of those. The one they're closest to or have the best signal.
Right. That's awesome. Well, what's your view on? We're coming near the end here. What's your view on RV parks for, say, the next 5 to 10 years from an investment perspective?
Well, they're a very good investment because there's just not enough parks out there. Like the RVIC, the outdoor industry group that we talked to in Orlando, predicts 9 million more in the next 5 years, and you can't provide enough spots for everybody. So we've got to, buy some spots and upgrade them, expand them. So we got a couple of those we're going to do, and then develop more spots. Like we were approached by West Virginia to come out there and say, we need it. We got to have some spots, right? They've got the new national park, and so that's what we're seeing. We've got people that just request us to do it, and it's going to continue to grow. And the thing is, this, that the pandemic during 2021, it estimated 2.7 million new RVers, and what we got was 10.4 million in 1 year.
10.4 in 1 year.
Yep,
of new
that was
RVers.
reported by KOA.
Wow.
Yeah, so you have a lot of people that started doing it, and some said, this isn't for me. I was afraid that I was going to get sick. Now, I already got COVID. I'm not going to be sick.
Right.
But you still have people like me. I'm an RVer now. You're an RVer.
Yep.
And then I have friends that go, oh my gosh, I love what you're doing. I love where you're going. I want to do it. And then now they started renting just like I did, just like you did.
Right.
And go, oh my gosh, this is cool.
Right.
So it's going to continue to grow.
So the other thing that I find, this is not investment wise, but just lifestyle wise, that's very different and cool, I think, about the RV space is that, when you pull into an RV park, you get out and you actually meet your neighbors. Right. And it's very social where, if you, in your house, like so many people pull in their neighborhood, they pull in their driveway and close the garage door behind them. They don't even know a lot of their neighbors. And then if you go to, an Airbnb or whatever, do you knock on the door next door to introduce yourself? Probably not, right. But that's the part that I love. Like I love meeting people at the dog park or, we're sitting by and we're at the campfire and we're just talking and just getting to know other people, which is fantastic. Yeah. So, hey, how do people reach you if they want to get involved in this space?
Hey, just go to my website, which is thervinvestor.com. And, you'd like to fill out or find more information there. You can always send me an email.
thervinvestor.com?
Correct.
Okay, fantastic. Well, I really appreciated you coming on. I think it's a space. Were you nervous getting into the space? Because you got in, like a lot of people are talking multifamily, you get in, like now you're like the RV guy, and it's more people are going to be starting to like go to you to get that information on, hey, how'd you get involved? And I want to do that too. Both doing it and also investing in it.
Yeah, it was an easy transition. I guess I just love the space and I love real estate. I always have, but then you got a love of this together. My mom was doing it and, I fell in love with it. So it just mixed the two together, right?
That's
RV
fantastic.
Travel
So this guy's been doing it for over 20 years, different types of real estate investing, and now he's in the RV park world. If you have interest in investing in RV parks or want to just pick his brain and get to know more about the industry, reach out to him, thervinvestor.com. And, I really appreciate you coming on, John. And until next week, signing off.
Thank you, Darin.
Thanks, John.
Thank you for watching Darin Batchelder's Real Estate Investing Show. If you liked the episode, please click the like button and subscribe to the show. If you already are subscribed, then thank you. And please share the show with a friend. Check out other free resources at darinbatchelder.com/learn.